The sheer degeneracy of Kyle and Suzu has finally been revealed in a 1,000+ page affidavit describing all of the money that they borrowed, how many people they owe money, and what they did with it, which apparently includes putting a massive down payment on a yacht that was meant to be the biggest in all of Singapore, bigger than any of the other billionaire yachts, after they were already defaulting on their loans and already owed money and knew that they were going under. What absolute scumbags, and what they've done to this market is definitely worth discussing. And luckily I have James Harris here from CryptoCompare to talk about everything that's going on in the market, including 3AC, Celsius, Genesis, Coinbase, and more. You guys don't want to miss this one. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and, I don't know, take your luxury yacht and drop it on the like button. Because everybody gets a yacht now. You just get a yacht. It's part of being in crypto. No matter what you've done, no matter how successful you are, you just go buy a yacht. But guys, as I mentioned, obviously, I have to be honest, as a Voyager user, who's obviously, as you know, I will be one of the top debtors there, potentially even get to vote. Not so great to hear that the loans that were given out by these companies were being used to put a down payment on a massive yacht when the company was already insolvent. Not the best feeling when you already have your money in question, but that really shows the extent of the insanity, what's going on here with 3 Arrows Capital and just how much contagion. Now, in a minute, I'm going to bring on the guests to discuss this, but first, of course, talk about Bullish, who've been an amazing sponsor for all of these months. I think they've actually been with us now for 7 or 8 months. Very long time, and absolutely crushing it. Liquidity increasing. You guys obviously have heard Surin come on many, many times to talk about the importance of liquidity, depth, volume, and you get to hold your own keys when you use Bullish, which I think is becoming extremely important. A lot of people realizing that not your keys, not your coins. So, guys, I'm going to go ahead and bring James Harris on from CryptoCompare. You guys have seen him before. He's one of your favorite guests. James, welcome.
Thank you so much, Scott. It's great to be here again. I'm sorry that the circumstances aren't as great as last time, but there we are.
Well, they will improve. I'm very confident of that. So it's just a matter of time. So the first very important question that I have to ask you, did you loan money to 3 Arrows Capital? Because everybody else did.
Well, they wouldn't let me in. So the short answer is no. I guess I'm grateful for that now.
Yeah, I mean, it's really insane. You look through this list of creditors now, and it's everybody. I mean, What were they possibly telling people? I'm not asking you to speculate. It's just in general, like, how were they possibly able to convince this many companies to give them this much money when now you dig in and realize that they were terrible traders, right? They basically, it seems like they were just selling snake oil.
Yeah, no, it's a very interesting one. And I think also they're now trying to sue the fund itself to try and claim some money for themselves. So, I mean, compounding misery upon misery. I think Travis Kling actually said it best on a tweet where he said, look, if you were to define what people thought was smart money, 3 Arrows Capital would be on everybody's list. And I think that's true. And that's one of those things that you see in crypto from time to time, people talking incredible games and, perhaps leveraging a past history in traditional finance, maybe being successful in certain arbitrage games, which are basically like picking pennies up in front of a steamroller. They work for a while and then they blow up spectacularly. What happens is that traders then leave the firm that they're at and then go to another one, and which is, of course, one of the things they might be trying here. So it is a shame that people get caught up in this, but I think the bigger evil is not necessarily 3 Arrows Capital. It's people accepting to lend money to them and not doing proper risk management procedures in checking as to what the exposure already is across the other lenders. I think there are even cases of lenders lending money to them on a completely uncollateralized basis, and that's not on 3 Arrows Capital. That's on them, right? Unfortunately. So are they spectacular traders? They're probably quite good. And when markets are going up, they're probably exceptional. But markets don't always go up, as we see. And this thing called risk management is a real thing, actually. And another thing that will certainly be covered a lot more deeply over the next coming weeks.
Yeah, I mean, I'm just gonna we'll walk through some of the news together today. I mean, here you go. Genesis files 1.2 billion claim against 3 Arrows Capital. Of course, Digital Currency Group has now sort of assumed that debt to take it off the books of Genesis to allow Genesis to continue. But this was part of a $2.36 billion loan to 3 Arrows Capital. So we thought that 700 million, a billion, right? I think BlockFi gave them 1.3, but that was well collateralized. Over $2.3 billion loan from Genesis. There is considered, speaking of smart money, yeah, 3 Arrows Capital is considered smart money, but you don't get much smarter than Genesis either.
Sure. No, I think that's true. And DCG in general are incredibly smart people. I think that they probably went over their risk limits on this one. It's probably safe to say. Looking at it, though, I mean, we sort of saw in the weeks before that maybe their loss would be around the $400 million mark, which if you then sort of extrapolate 80%, LTV or something like that, then you're probably looking at $2.3 billion worth of exposure, which is, of course, exactly is what came out yesterday. But if you look at the total exposure to 3 Arrows Capital, the debacle, maybe 3.5 billion in total. If Genesis with 2.3 of that, I think that's actually quite bullish because it's fairly well contained with them. They're actually holding the biggest part of the bag. And, these are guys that have made billions of dollars in the last couple of years. So they probably can hold it. I mean, it's going to hurt a lot, but they can hold it. Which is a good thing.
Good point. That's a good point. If better that Genesis is the biggest debtor here than say Voyager, Celsius, something that's more retail facing that sort of blew up based solely on that loan, because obviously Digital Currency Group has Grayscale. I mean, all of these things obviously, and it shows actually that this was partly collateralized. 17.4 million shares of GBTC, which of course they would take as collateral, right? Because they sort of have control of that market. 446,928 shares in Grayscale Ethereum Trust, 2.7 million AVAX tokens, and 13.9 million NEAR tokens. Now, the problem is obviously that's all volatile collateral. Right. And that's kind of been the problem here, seemingly, is that everybody collateralized loans using crypto, and crypto went down 60, 70, 80, 90%, depending on what the asset is.
Yeah, no. I mean, look, posting collateral like crypto is a volatile thing. As anyone who's traded futures perhaps using in-kind collateral, on the upside it's great because you're booking profits and your collateral grows, but on the downside those levers work in reverse, and actually it means that you hit the wall a lot sooner than you think, which is why you get these big massive cascading waterfall effects on exchanges as the exchanges themselves close the guys out who probably weren't expecting to be closed out for a while because they hadn't done the sum of what happens to the actual collateral. So that's something that's definitely interesting.
So then on a more positive note, I guess if we want to look for a silver lining in this, you sort of just touched on it. We should have seen the selling already, right? Yes. I mean, if these were being liquidated by either 3 Arrows Capital or if they were being margin called or however it happened, the assets now, that sell pressure at least should be partially removed from the market.
Yeah, I think that sell pressure, there's probably still some more sell pressure, but I don't think they hit the bid anymore. What happened over June is that people had to hedge their exposure, and they had to do that in drastic measures. So they were hitting the bids and basically cratering the market. I think now what will happen is that it will be a little bit more measured. So I don't know. We've been looking at the markets as a whole, and we're beginning to see this phenomenon of Asian strength, European sort of sideways holding on, and then a little bit of weakness into the US markets. And that latter is it might be profit taking on a day-to-day basis, but more likely it is US based bag holders that are just unwinding a little bit into this rally. So that actually helps the picture a little bit, perhaps for Celsius and Genesis, because the value of their collateral has gone up anything between 20 to 70% in the last 6 or 7 days, which really helps. But also explains why the market's probably weaker in US time zones.
Yeah, there's no surprises that considering all the bankruptcy hearings and such that are happening in the United States and how many US-based funds, and that we obviously have sort of more pressure probably from regulators here. Yeah. It would make a lot of sense for people to unwind any chance they get to sort of reduce their exposure. That makes perfect sense. I mean, you just brought up, of course, Celsius. I mean, you dive into their bankruptcy filings, and as they said here on CoinDesk, kind of, I mean, we know this is going to happen, of course, right? We've already seen them paying back at least their DeFi loans, but we know that retail is going to bear the brunt of this. They're at the very bottom of the line, as usual.
Yeah, they're unfortunately at the bottom rung, and this is of course one of the arguments for having any money on a sort of centralized platform. You know, we don't have the protections that you have elsewhere. Perhaps you have some banking protections. You've got some in the UK. I know you've got some in the States as well. I'm not sure that that holds here. And you know, just looking at that Celsius sort of lending statement, it looks like it's underwater. So potentially depositors looking at a fairly large haircut, if not maybe all of it. But again, this rally will be helping. So you know, we've got to see what materializes. But I feel for everyone that's put money with them. But you know, you do have to always question yourself, like if there are these massive yields available, like where are these yields coming from in a yieldless world? And you know, lending money to degenerate gamblers is one thing, but there's probably a limit to that, especially when those markets aren't there anymore to make the gains that those guys were making. So it's something that you probably have to check. But I think there are silver linings. You know, you mentioned one. I mentioned one before, which is that maybe it's a little bit more contained. Hopefully, it's a little bit more contained. And Celsius paying off their on-chain debts is another silver lining, because what it demonstrates is real robustness in DeFi. Right? People they paid back their capital on chain. One, because it was over collateralized and they needed the money. But two, it just shows that when an algorithm is enforcing you to pay back money, you do it. Whereas if someone tries to phone you and you don't pick up the call, well, you know, that's another thing. So DeFi worked pretty well, I think, and that's not a revelation on my side. I think there's lots of people in the markets that are saying that. But you know, Maker Aave kept going exactly as programmed, and so that's tremendously promising in the long term for any algorithmic type things. Now, of course, it was an algorithmic failure in Luna that kicked this whole thing off, but there we are. You take the
right. But I agree with your point. And now I do love the idea that, and I talked about it yesterday at length, but that DeFi has basically gone along humming successfully, while centralized, obviously, platforms have completely collapsed. But the question is that because it's DeFi, or is it because by nature to be able to take a loan in DeFi, you have to basically be over collateralized and it's easy to liquidate, right? The DeFi can't make the human decision to give guys uncollateralized loans because they view them as smart money. I mean, right here, I pulled up because this blew my mind. This was blockchain.com reaching out to Three Arrows Capital. You could probably, it's very hard to see, but basically they said, hey, we're going to have to call some of this back, stable flow. And the response from the Three Arrows Capital guy, which will probably end up being the meme of the century, was, yo, right? I mean, it's just, it's incredible, right? But so to your point, I think it's really amazing to see how efficient DeFi is. But maybe the reason DeFi is so efficient is because you can't get a bad loan. You just literally, like a DeFi protocol, a smart contract cannot decide like a human that you're worth lending to if you don't have the collateral.
Yeah, I think generally speaking, that's correct. There has been probably one moment where a single man pushing a button has stopped something going to zero. So I think during the sell-off of that was COVID-driven in March 2020,
BitMEX.
I think BitMEX had to hit the red button and turn their engine off, because it probably would have programmatically driven the Bitcoin price to zero, given their order book imbalance. And so this override thing is sometimes useful, but I'd say in the extreme, in the long run of things, you know, having well-functioning smart contracts is probably the way forward. But we're still living in this world where TradFi and DeFi have a role to play. We're not in either paradigm. We're somewhere in the middle at the moment.
Yeah, and I think it certainly, listen, BitMEX is already a centralized platform, right? So of course you expect a bit of human interaction, and that's a exchange. But when it comes to strictly, you know, DeFi lending with collateral, it certainly works because you can't kind of give those degenerate loans. And now you have this $1.2 billion hole in Celsius's bank in their balance sheet. And apparently a lot of the assets that they do hold are really very illiquid. So it really leaves them only having, you know, 1 to 2 billion. A lot of the conjecture is saying, with basically 5 billion to pay back. I guess that now begs the question, though, for these platforms, the Voyagers, the Vols, the Celsiuses, how much, and I'm not asking for a number, but we've already seen, I mean, Ethereum's off an $800 bottom trading at 1,500, right? It's almost doubled. It's very sneaky major rally here for certain assets. How high in general do these things need to go for all of a sudden for these platforms to start to get very lucky? And and now that we're at 1600, do they just sell because holy shit, this might go down again? Or it's a very, I mean, they're obviously, if they're in Chapter 11 bankruptcy, they're not actively managing these assets themselves, but you get the point.
I mean, I don't know how much these guys can gamble on upside. I think that if they see an improving picture, they just have to let some of the inventory go, even if they believe that we might go quite a bit higher. You've got this concept in crypto and in assets in general of a sleeping dragon effect, whereby people are massively underwater, but you then hit a level where some people are quite happy to sell, and so a wall of liquidity comes and arrives, and they wake up, and then you might go a little higher, and then another ton of people wake up, and
that's literally why charts work, right?
Yeah, right, exactly.
Just identify an area where a whole bunch of people are willing to get out. Yeah,
exactly.
So,
right.
Continue.
So you've got quite a few of those, but I think ETH back up through say 2,500, things start looking a little rosier. I think Bitcoin now is above a price where more than half of the participants are in profit again. So, it got quite hairy down in the 1800s, 1900s, that kind of thing. But it's looking a little promising. But of course, there are lots of reasons to be positive, because I think it got about as bad as it could get in June. You've probably done the CPI numbers to death and what the markets are saying about basis point hikes. 75 basis points pretty much nailed on. But you had all these negative catalysts done with, right? And in the short term, there's not very many to come, right? Because the Fed will do something in September, probably 75 basis points. It goes to sleep in August, so there's nothing happening there. Meanwhile, commodity prices rolling over, right? I mean, crude, natural gas, and wheat technically in bear market. Right. So and then what people don't realize is that stable coins were in the, 3 stable coins were in the top 10 market cap list going into July. Right. That means that's literal dry powder. So all the conditions are here for a short squeeze. We've seen a short squeeze. Let's see how far we can run here.
Yeah, I agree with all of that. I know that we kind of asked you before, but Celsius, a big part of their plan here is to mine their way out of it. But
Right.
I think there's a lot of skepticism there. And what people are realizing is that actually the mining operation is barely up and running. And they've asked, as part of their Chapter 11 bankruptcy, I believe for $5 million to be able to finish their mining facility so that they can enact this plan, which is up to a judge in the court. So I would just say that for now, anyone who's reading that Celsius is going to mine their way out of this, anything is possible. But right now, they literally can't even do it without court permission to finish their facility in Texas.
And if they did, I suspect the time frames are pretty long.
Years.
Yes. Exactly.
They're mining, I think, 14 Bitcoin a day right now. I read, and this is based on mining 15,000 Bitcoin or something.
Yeah.
Absurd.
Yeah. That might take a while. But look, I encourage positive moves like that. Trying to be constructive is generally the right way. They probably need to find another magnitude of scale though to play that game, I would have thought.
Yeah, I mean, right now you touched on it. I mean, I think the bailout for all of these companies is just for the market to go up. Right. And you talked about how bad things were at 17,500, 18,000, obviously for Bitcoin. Most addresses were not in profit anymore.
Right.
But that goes back. I mean, that was the liquidation of all this Three Arrows cap. I mean, that was the core of this contagion. So if we're still rising while some of it is still winding down, it really does indicate that, listen, I'm not saying the bottom has to be in, but the bottom of the contagion should be in.
No, but I agree, and we've got some genuine crypto-centric positive catalysts on the horizon now. I guess the biggest runner has been the Ethereum and its ecosystem, right? And you may cover it at some other point. But the merge is coming, and there was a subnet or a subnet merge that happened the other day, which brings the actual full blown thing, on the horizon for as early as September, and that's way before what people thought. And there are lots of people that believe that merge will drive ETH as a proper investable asset with a negative supply mechanism, and of course moving to proof of stake, which will please the ESG crowd. So there are real positive catalysts to be seen, and look, funding still pouring into the space. We still see tons of funds setting up in DeFi, Web3, and gaming, and the gaming side. So this is completely different from the last two bear markets, right, where literally nothing happened. 2018 was a complete heat death for crypto. It was nothing was being built. It was all just zombie coins. Whereas I couldn't be further from the truth here.
Yeah, that really is a major differentiation. People love to just sort of point back because of a chart or a price or just because it was a bear market, but all bear markets are not the same. This is the first time that we've sort of suffered through actual macro, macro bear market or downside from that, I think. So it really is different. I mean, I just want to point out a few things I just can't get over the Three Arrows Capital. I got to come back to it. Sure. You heard about the yacht, I assume.
Well, you told me about it. I hadn't actually seen it. But I mean, that's hubris. Another thing to look out for when things may be too good to be true is hubris. And it couldn't get more hubristic than the biggest yacht in Singapore.
I think hubris is and I've made this point over and over again, hubris is what sunk Luna. Right. To me, like, Do Kwon really believed his own bullshit because he was endorsed by the biggest names and the biggest funds, and everybody was empowering him, throwing him money. And so he went online and basically just destroyed anyone who had even a legitimate criticism, called them idiots and dumb and the sort of usual. And they were all right. But, he was, I guess, young and had that level of empowerment. And now we're seeing it here with Three Arrows, who obviously lost about $600 million because of Do Kwon's hubris. So you'd think maybe there was a lesson there.
Unless, of course, they're going to tokenize the yacht, at which point they'll make money off it. And it was, a 4D chess move. Who knows? Probably not.
I feel like I own a yacht right now. That's all I'm saying. As a Voyager debtor, I feel like I own a little, like maybe the galley sink.
Yeah, you feel like you've spent enough for one, but you haven't got one yet. So you're expecting one in the mail, right? That's fair enough. Right.
Maybe they'll let me on it for an hour. The crazy thing is that they apparently they've only made the down payment, and it's due to be delivered in Italy in the next month. So actually, that could become a very interesting part of the liquidation here. And it's funny. Michael Saylor came on here before, and he sort of joked he has about 6 yachts, I think. And making the argument that Bitcoin was pristine collateral because it's very easy, as we've seen in DeFi. You post the Bitcoin, it's very easy to liquidate. It's highly liquid. It's very, very hard. He can get a huge loan on those yachts, but it's very, very hard to go get that yacht if he parks it in, the South China Sea or something.
Absolutely. Don't have much experience in yachts myself, but
me either. I've stepped on some, but I'm certainly not buying any myself at the moment. So another interesting sort of part of what's been happening here. I love having you here to just go over the news with me. By the way, I never do this, but it's awesome. I mean, makes my life so much easier. Is that we're seeing like all of the crypto related stocks actually outperforming again. They're sort of like leverage plays on crypto. They were obviously on the way down. We saw miners get just absolutely destroyed. But on the way up, maybe there's some opportunity here if you believe that the crypto market is bottoming. I mean, Coinbase up 9%. I saw MicroStrategy exceptionally well. Marathon. I mean, is this sort of a way, do you think, to play this market for people who maybe are gun shy about actually touching the underlying institutions and such?
I think so. I mean, I haven't actually checked the numbers for Coinbase and MSTR and that sort of stuff, but I would say that short interest is probably going to be quite high. There's a ton of people on traditional street that just don't believe in crypto at all in any shape or form. Whereas, they're just wrong in an absolute sense, right? They might be wrong, they might have pockets of rightness, but the reality is that probably these firms are overshorted, and they probably squeeze as well. So it is a good way, and another way that you might look at it, and we haven't touched on this at all, but you might look at GBTC eventually, and the reason being is that this lawsuit is the correct thing to do. The lawsuit that Grayscale have brought, because there is a precedent. This is what happened in Canada. The Canadian product providers wanted to issue an ETF. The regulator said no. They sued them, and they said yes. I think that this is definitely a route to getting what you want. So there's maybe a play there. So probably like GBTC here as well as Coin and MicroStrategy. I like MicroStrategy a lot. I mean, just because I think that Michael Saylor's done so much for the space. I'm cheering for him, really.
Yeah, I mean, I think that everyone, there's obviously has his critics and his haters and stuff, but I think that anyone who really truly is cheering for crypto has to be cheering for him right now, right? And then the final, I only had one more story actually pulled up, which is that Dubai unveils a metaverse strategy, aims to attract over 1,000 firms. So basically going to just put Dubai in the metaverse. I mean, it looks like Star Wars to me.
I mean, that sounds good. I was actually in Dubai for a while near the beginning of my career, and I found that I wish I could have placed my avatar during the summer months there because it was hot as hell. so I'm all for that. But no, very interesting. I think also on the regulatory side and what they're doing, they're definitely building a really good little hub there for crypto. I haven't been in the last couple of years, but my friends who tell me it's pretty impressive.
They're saying 1,000 metaverse companies, I believe 30,000 virtual jobs they're looking. I mean, this really is a play to help their local economy, right? And to just be ahead of this trend entirely. I mean, this is a pretty big move, especially to hear it that they're obviously not wavering at all because of the bear market and what's happened to metaverse coins and companies and such.
In many ways, it's a perfect time to build, isn't it? I mean, if you believe in the long-term nature, everyone always says, and it's cliche, but it's true, the best time to build is the bear market because you get talent more cheaply, your own talent isn't getting bid away, and you're not checking the price every 2 minutes, frankly. So you get a lot more work done.
Yeah, I mean, that is not a meme. I sat down with 30-some people at Consensus to record podcasts, and every project CEO or leader, every single one of them said, well, we're kind of enjoying this bear market, to be honest. Right? Exactly what you said. You think it's sort of a joke, like we build in the bear market. But if you remember, I mean, people forget, we talked about this, a year and a half ago now, I guess, but the early 2021, if you were running an exchange, you literally couldn't do anything but customer service, right? Because you were getting signups 1,000 a day, 1,000 an hour, whatever it was, and nobody could scale to that level. So everything else fell by the wayside. All people cared about was number going up and just trying to keep up and put out fires. And you don't have to do any of that in a bear market. Of course, that means we're seeing Coinbase and Gemini firing people, but you don't have to worry about any of that in a bear market.
No, I think that's right. If you're a firm that's been building and you fought hard to have your talent, like CryptoCompare has, for instance, it's not a great move to just instantly fire as sort of a knee-jerk reaction. I think that holding on to your people is probably paramount. There will be firms, especially in the US, who are a little bit more sort of I guess loose like that, quite happy to sort of hire and fire, and then if it turns back up, hire them again. But now is a good time to build not just customer loyalty but people loyalty, and try and maintain your pipelines for the year as well. But obviously, look, if this downturn lasts 2 more years, then it's going to be difficult for anyone. But if you can, you wear it out, you keep your people happy, and then you're in a great spot for the next run, hopefully.
Yeah, well, listen, I've kept you for a full 30 minutes. We ended up doing like a full podcast here, basically. Is there anything else, though, that we missed that you're kind of dying to talk about before I let you go?
I think we've covered quite a lot of ground, Scott. So it's been amazing. Thanks so much for having me.
Thank you so much. Everybody follow James. I have your Twitter name. You could probably just tell us, but it's Jem Harris 11, JEMHARRIS 11. So that's where you can find him, obviously, and keep up with CryptoCompare. But I highly encourage that you follow James. Great.
That's very kind, Scott. Thank you so much, and have a great day.
You too. So, guys, back to me. James is awesome. It's nice to have a guest because obviously at CryptoCompare, it's probably his job to actually know what's going on in this market at all times, and so it's good to have someone to add that level of color to every single one of these stories. Because to be quite frank, listen, we had a somewhat boring news cycle, which we all complained about for a while, but man, I would give for boring and not broke right now, as opposed to everything breaking in this level of contagion that we've seen in the market. I do want to go back really quickly because I know you guys expect it. We're going to go look at a few of the charts that we kind of mentioned here and see what's going on with the market from that perspective. I mentioned, obviously, Coin, MicroStrategy, and Marathon, so worth probably taking a very quick look. I haven't even actually looked at what the stock market, how it opened today, but Coinbase, really interesting spot here, actually. I mean, if you're an MA trader, guys, I'm going to say again, take every chart with a grain of salt. They're fun to look at, but they're risk management tools, and really nothing else is not going to tell us what's going to happen in the future. But Coinbase is right at the 50 MA on the daily, which is a key level for anyone. I mean, the 200 is, God, up at 186. That would be amazing, but you got to flip the 50 to start talking about that. We do still have this gap over here right around $100. And we do have a breakout now and retest seemingly if this can continue up of this local line. So Coinbase is actually looking pretty good right here. But of course, the caveat is that needs Bitcoin strength, which we are seeing. MicroStrategy, listen, you can still see MicroStrategy bought Bitcoin. They were at 124. MicroStrategy is at 240. It basically has still doubled from when they bought Bitcoin, even though, of course, the stock went all the way up to $1,315, which was an epic move, obviously, and probably disproportionate to the upside. MicroStrategy has still doubled in under 2 years. It's an insane performance for a stock, insane performance. And looking like it's got more potential to the upside. It went from all the way being overbought at the top to hitting oversold. No surprises here, right? Went all the way down to oversold. Now you expect it to make that trip. So things looking good for MicroStrategy. Marathon, obviously minor. This one's even more interesting. Look at that bounce off of support. It's not something I was watching, but that was a screaming buy at $5.25. Obviously, hindsight is 2020, but not something that I was even trading or looking at. But listen, that was the 2020 high of this entire move, bounce exactly off it. But unlike Coinbase, I should say, this has actually flipped the 50 MA already to support. 50 MA is still pushing down a lot of pressure, but so still a lot of upside potentially here for miners if this goes well. I did a long piece on mining in the newsletter today that you might be worth checking out. If you guys missed the JP Morgan report that basically said that the cost of mining went from $24,000 to $13,000 per coin in 1 month from June to July. A lot of people believe that that means that gap is going to be arbitraged out and the price of Bitcoin has to go down to meet it. I would argue that perhaps the price of mining can come up to meet price. That is a two-way street, and we will see certainly what happens with that. Of course, now let's take a very quick look at Bitcoin. Hard for me to get extremely bullish still. I'll tell you why. It's because there's that 200 MA. We've talked about it over and over again. I don't want to talk about it ad nauseum, but we're 1, 2, 3, 4, 5, 6 week right now underneath it. It's never been under for more than a week. Got to flip that. But this was the massive mean reversion back to a 200 MA. And so if you're looking at the things that are way below it, like MicroStrategy and such and Coinbase, well, you should eventually get mean reversion back. It's just a matter of how high it comes on the way back up to do it. Nothing really to see here on the 4-hour chart. Yeah, not that exciting. After this move, really start this resistance here lines up with that 200 MA. The 200 MA is absolutely the story. But listen, altcoins, we looked at them yesterday. Solana breakout looking absolutely monster. Would be cool if I still had some, but alas, Voyager. AVAX breakout still hasn't gone overbought. Looking very good. Algo, I shared this in the newsletter. Thanks to DrewSified for pointing this out yesterday. Yeah. DrewSified pointing this out. We were on the 4-hour. Let's take a look at it there on the 4-hour. This is the first time I've actually shared an altcoin, I feel like, in the newsletter in a very long time. But as he pointed out, we sort of had this upper range in blue, broke down to the red range, and price was about here, and we were looking for a flip. And now it appears it's a little ugly on the 4-hour, but when you look at it on the daily, that we had the break above that resistance yesterday, and now we have a retest of it as support today. Add in this descending line, and you actually have a pretty good looking chart, but really hard to get too excited until you break sort of this macro, larger descending black line that you have right here, right? So still a lot to wait for, but we do kind of see some hope here with altcoins across the board. And listen, we might get back to doing some chart streams in the future if things start to look good. That would be a lot of fun. It would be fun. But thank you, DrewSified, for pointing out Algo, and because it gives me someone to blame if it goes bad. So I'm going to point everyone in your direction if that chart changes. Just kidding, man. Just kidding. So guys, that is all I have for you today. I will, of course, be back tomorrow at 9:30 a.m. Eastern Standard Time. That ticker was MARA. That's Marathon. There's Riot, Mara. There's quite a few of them that you can do. And well, that's I love this. Creative, as always, would you stop showing bullish to your viewers? It's been less than 1 month to shield a certain sponsor, and your clients now have millions lost. So bullish, you hold your own coins. So I don't really understand. That's literally the point. Literally the point. It's a decentralized exchange with centralized functionality. Therefore, you can't lose your money. It's yours. So you, my friend, can suck it. Anyways, guys, that is all I have for you today. I will talk to you tomorrow. And yeah, you should actually check out Bullish right down below. That's all I got, guys. Peace. Bye. Later. See you.
Let's go.